Now, for the week ending January 20th, sales of beer were down 30% year over year. Now, some of it might be due to the Budweiser boycott, but most people who drink beer, they don't stop drinking beer. They might switch beer, but they're not stopping. Just a small snippet of what's happening in the economy. Now, New York City Community Bank took a tumble yesterday, and also yesterday after hours, after their credit was downgraded to junk by Moody's. Now, today the stock also took a tumble, but it has pared its losses and is trading about even. And the price of this stock, it might flip-flop like a fish out of water, but my bet is it's probably finished. Maybe this weekend or next weekend, it'll go into FDIC receivership. And this is just the beginning, folks. Commercial real estate is going to take many of these banks down. And this has been a growing crisis that Wall Street and Main Street can no longer ignore. And many of these regional banks, they're loaded with commercial real estate debt. And when one blows up, it's going to be nothing but contagion. You're going to see one fall after the other like dominoes. Now, a lot of the economic news that's come out in the last few weeks has been great, but as you dig into the numbers, they are more mixed signals than anything. And always look to trucking and the railroads to get a great barometer of how the economy is really doing. Now, we had earnings from 3 of the nation's largest railroads 2 weeks ago, and rail volume is slightly up. Norfolk Southern's rail volume was up 3%. Union Pacific's freight volume was up 3.5%. CSX's freight volume was up 1%. And this is all year over year. So on that front, that's good news. And we also had good news coming out of the automaker Ford. Ford reported their quarterly earnings yesterday, and revenue was up in the October-December quarter of almost $2 billion year over year. And that's despite the auto workers union strike. Now, conversely, trucking is not doing as well. And in this current and last quarter, we've had a few trucking companies file for bankruptcy. And with that, of course, layoffs. And the U.S. truck freight market ended 2023 with declining freight volumes. And we're talking significant numbers. We're talking down 20% year over year. And that's pretty significant because if you look at October through December of last year, there were relatively few weather problems throughout the nation. So there was nothing inhibiting shipping volume in trucking. So we're seeing railroad freight volume move up and trucking freight volume move down. Now, we had the tech company Snap release their earnings yesterday evening, and the street didn't like what they had to say. And they're laying off 10% of their workers, and that stock is down 35% today. Estee Lauder, they also came out with their earnings, and conversely, they're laying off 1,800. So we're seeing some pockets of weakness and some pockets of strength in this economy. And who's going to win that battle? That's a $64 billion question. Now, if you like this type of content, please like and subscribe. Thanks for watching.